let's focus to the power sector as a whole because a lot is happening there. We have Mr. Akhilesh Awasthy, the CEO at Hindustan Power Exchange, as well as Harshvardhan Fole, the Vice President at IIFL Securities, joining us for a discussion. The reason why we are talking about the power sector today is because the government has actually invoked the emergency powers, wherein they have asked the coal-based power plants, which run on imported coal, to run at full capacity for the next 3 months, as well as they are talking about how the excess power supply can be traded on exchanges as well. Let me first go to the guest coming in from HPX, Mr. Akhilesh Awasthy. So, what do you think about the power demand going forward and the latest, measures coming in from the government, wherein they have invoked Section 11 again? Does that tell you that there is going to be a power crunch and coal crunch coming in the coming months? We can't hear you, Mr. Akhilesh, very well, but let me pose that question to Mr. Harshvardhan Fole as well. Uh, Mr. Fole, your take as far as the government measures is concerned, and what does this tell you with respect to the outlook for power sector?
See, the power demand has continued to surprise us. Frankly, double-digit growth on a very high base, that is quite a surprise. And interestingly, no IPP has complained about significant payment delays. So that means there is something right which is happening. And on that backdrop, if the government has taken measures such as invoking Section 11 or asking utilities to import coal so that the peak demand can be met and there is no shortage of power, at the margin, it's certainly a positive, step. And it only goes on to saying that, over the years, essentially the system, planning has certainly improved. And it will ensure that there are no mass power cuts at a time when the economy is bottoming out. So to me, it's certainly a positive step at the margin.
Good to hear that at least the planning has improved, and that will mean that during the peak summers, we will not have the power cut at a time when, as you pointed out, the manufacturing and industrial sector is actually looking quite robust. But Harsh, which are the companies do you think are best placed to perhaps make the most on the upside?
See, frankly, after the decadal-long consolidation, strictly the large merchant power revenue models don't continue to exist as of now. There are companies with bits and pieces, some exposure to the merchant capacity, but that is not that meaningful. And therefore, as a conservative house, we tend to, like the utilities with cost plus revenue model, which are growing capacities and earning that cost plus assured ROE spread. And in that context, we like NTPC, Power Grid, and essentially NHPC, which are scaling up capacities to meet this, rising power demand in India. On that backdrop, we also like Torrent Power and of course CSC, where these are more distribution-led utilities, and we are hoping that some reforms will kind of play out, and these companies will actually benefit it from these reforms. So we are quite positive on the sector per se.
Positive on the sector, positive on NTPC, Power Grid, Torrent Power, and CSC. I'll come back to Harsh, with those questions on Torrent Power, etc. But I think we have patched that line with Mr. Akhilesh as well. Mr. Akhilesh, I was talking to you about what does it mean for the prospects for the trading companies as well, because the government has allowed that perhaps there could be surplus power from a lot of these imported power plants, which could be now traded on the exchanges as well. What does it mean for your sector?
So definitely, this additional capacity coming in the power exchanges would help volume grow on power exchanges, and good step taken by the government with regard to expected high demand in coming months. So definitely, this is going to help power exchanges to garner more volume on their platforms, as well as for the power trading companies also. Yeah.
So, Akhilesh, if I can ask you to be a bit more specific in the sense as to what's the trading volume at the moment and what kind of growth do you envisage? Because Harsh was just pointing out that the base is also quite high of the overall power demand, but it's still growing at high single or at least early double digits. Is that the kind of volume growth you are expecting as well with respect to trading volumes?
So as far as trading volumes are concerned, specifically on exchanges, the growth is quite robust. CAGR of around 25% is being witnessed on exchanges platform. And recently we have been allowed some longer duration contracts also. So a lot of volume is again coming because of that. and growth is further going to go up going forward. So the growth is quite robust, and we are seeing anything above 25%.
Sure. If I remember it right, and please correct me, Mr. Akhilesh, if I got it wrong, there was a cap that was there on trading of the power prices at around 12. Is that something which is a bit of an impediment? And what's the current average, market clearing price?
Clearing price is around 8 rupees, and for subsequent months also the prices are quite on higher side. Yes, there is a price cap of 12 rupees which has been put by the regulators, but that is not really has hampered any kind of volumes on the exchanges. What we see that there is a proposition which is going on to launch another segment where high price power coming from mostly gas and battery storage and some imported coal based power plants would be able to participate in the high price segment, where the buyers who are ready to pay high prices can come in. So that issue would also get addressed, that maybe some gas plants which were remaining out of the market would able to come in and participate in this demand growth story.
Thought, Mr. Akhilesh, I want to come back to Harshvardhan and talk about Torrent Power specifically, because that remains as one of the top picks. Harsh, what makes you that bullish on the counter? Is it that new parallel distribution license that they're bidding for?
See, over the years, that is one company which has grown the earnings through combination of renewables as well as distribution. And that is what the incremental capital allocation strategy tends to be. And we are quite upbeat on both of these segments. Distribution, because as the power demand grows and the reforms kick in, private players will actively play a role in shaping up the sector. And Torrent is one of the few players who have got the DNA to scale up the distribution business. So that's number one. Number two, even while scaling up the renewable portfolio, they've exhibited that they are not reckless in terms of bidding, and they're selectively taking over assets or selectively growing the portfolio, with returns being the critical factor to monitor. And then, if you have a strong balance sheet, prudence in terms of capital allocation, you can not remain ignorant to such kind of growth story. Moreover, the earnings growth will be in high single digits or low double digits, and the valuations are quite undemanding on FY 24-25.
Okay, though the problem with Torrent Power has been that the earnings, at least on a quarterly basis, have been very volatile. But as you pointed out, it's power business which needs to be looked at with a different lens altogether. So of course that benefit of doubt is given. Mr. Akhilesh, I wanted to get a sense from you with respect to the market share that you hold at the moment, because of course the stronghold was with IEX since they had the first mover advantage. Are you looking at increasing the market share? What is it at currently, and what's the target?
So currently we are at around 6% of the market share overall volume traded on the exchange, and it is growing. It is early days for us. We have been in the business since last 8 months now, and we have already got 6% of the volume. Going forward, getting to the first milestone of around 15% should be possible within next few months.
Okay, and Harsh, if I wanted to ask you, with respect to the power sector, a lot of things are changing for the positive. What's that thing that is still worrying you, which is still, let's say, a bit of an impediment for the sector, because the discom receivables, etc., have come off, but they still are at very elevated levels?
Definitely, going forward, what we see that supply side would remain a constraint. Over past few years, we have seen that not major investment has happened into conventional power sector, and a lot of investment has definitely happened in the renewable side. But as we know that renewable being variable in nature, that is the kind of constraint we are going to face, and these kind of things would keep coming back on us in terms of very high prices and controls being put on these prices from regulatory side. So this is what we feel is going forward a big challenge. yes, there is improvement as far as discoms payables is concerned, but overall health of discoms ultimately needs to be addressed at some point in time. That particular situation will also play out.
Sure.
So these are the two concerns which we continue
Sure.
to have.
Sure, and just Harsh, if before letting you go, I can just ask you quickly a question. Now, the government is forcing these companies to import more coal if needed, but what happens to the cost for all of this? Is this going to be a complete pass through? Is that mechanism in place, or will the companies face working capital issues?
See, it's a very valid critical question. So while power demand has grown and partly the states have been able to, pay for the power thus far, partly because of, the collection efficiencies perhaps going up, and perhaps also because of the incremental working capital. I'm being mindful of one fact that there are 7 state elections lined up in this particular financial year. And typically, states have not shown strong political will during the election times to increase the power tariffs. What can derail the whole story is basically if the demand keeps on growing recklessly and states do not undertake required power tariff hikes. Then perhaps we'll have to revisit the whole bullish argument. I'm hoping on the fact that commodities eventually will correct, the coal prices will moderate, and even though the demand will keep on increasing, the lower cost pressures will ensure that even on the existing tariffs, states continue to service their PPA obligations. But yes, if the commodities remain at a elevated level, then we'll have to revisit the whole hypothesis.